Nvidia has a promising future. Although we lost out on a great chance by selling, we still anticipate substantial growth, with the stock perhaps hitting at least $1,000 per share over the next 3 years. Do you have any regrets? The first is that we own it in more specialized techniques. Because of our investigation, we have removed it from all locations, and the flagship strategy no longer owns it. Everyone is aware that Nvidia has made these incredible advances in AI possible, but they aren't considering who will stand to gain the most from them, and we have a strong opinion on that. Almost all of the stocks in our portfolio are there for AI-related reasons. They are all similar in 4 ways. First of all, they are already very skilled at what they do, therefore they have extensive domain knowledge in their own industry. Second, they are taking this extremely seriously and have brought in AI expertise. Over the past year, Nvidia's stock performance has been nothing short of extraordinary, and the company has been on an astounding run. The stock price of the corporation has increased by a staggering 206%. Both experts and investors have taken notice of this extraordinary rise, which has raised general optimism regarding Nvidia's prospects going forward. At the moment, an astounding 91% of experts recommend buying Nvidia stock. To find out what is causing this positive feeling and to see any possible warning signs that might be approaching, it is crucial to investigate the matter further. The difference between Nvidia's current stock price and the median price target issued by analysts is an important factor to take into account. Nvidia's stock is currently trading at about $134, although the consensus price target is currently $125. This suggests that analysts may need to adjust their price targets upward to reflect the stock's momentum, as Nvidia's stock has surpassed their forecasts. 3. They are widely distributed, ideally worldwide, but perhaps solely in the United States or in a certain region. Then comes proprietary data, which is the most significant. Our businesses have access to data that no one else does, and they will be able to leverage foundation models such as OpenAI, Anthropic, and Meta's Llama 2. They're open source and free. Additionally, they will use their private data to construct specialized models on top of those utilizing their own AI knowledge, which will enable them to come up with better answers than their rivals and keep them in the dust. This suggests that you wouldn't reintroduce Nvidia into the benchmark portfolio even if its price dropped, for example. It's fascinating, like everything else, its price dropped toward the end of last year, and we did repurchase it because, based on our projections, it would be able to yield a 30% compound annual rate of return at its lowest points. Our research led us to believe that, at a compound annual rate of return, compliance is 30%, which is a respectable return. This is a unique company, even though it wasn't as good as many of the other stocks in our portfolio. And we said, all right, we'll put it back down there. We made some readjustments at the start of the year again after it took off, because ChatGPT was becoming more and more popular, while our other stocks were still stagnating. But do you think so moving forward? We are always available. That rate of return projection derived from our 5-year model is what really motivates us, isn't it? Additionally, we concentrate on enterprise value, which includes bonds in addition to shares. As a result, it is conservative. And unlike EPS, EBITDA, earnings before interest, taxes, depreciation, and amortization, cannot be manipulated. We believe that, only in terms of valuation, we have a very conservative profile. We get that question a lot. Although this demonstrates Nvidia's outstanding success, it also calls into doubt the stock's prospects for future short-term gains. It may indicate that Nvidia's stock is nearing a top, at least in the near future, if analysts do not modify their price targets appropriately. The impending Friday expiration of 5 million share options is another element that might have an impact on Nvidia's stock price in the days ahead. As traders modify their holdings, options expiration frequently causes the stock market to become more volatile. This can result in some short-term changes to Nvidia's stock price. Investors should prepare for any setbacks in the near future, even though the company's long-term outlook is still favorable. To determine the mood of the market and possible volatility, it is crucial to monitor the stock's movement around the option's expiration date. The market for graphics processing units has long been dominated by Nvidia, and this dominance has significantly influenced the success of its stock. The competitive environment and the long-term viability of the present demand for Nvidia's products must be taken into account. Though, how are these multiples to be paid? We are paying huge multiples now because we want and support our companies to make aggressive investments, take advantage of opportunities, and dominate the market. Therefore, even if we don't think it's the case, we estimate that the multiples you see on our equities today will compress significantly over the next 5 years to little more than market-like. Additionally, revenue growth, margin growth, and overcoming the multiple compression headwind are what drive our rate of return estimates. As Nvidia sets a new record, the S&P 500 and the Nasdaq saw record highs and closures, and Nvidia's ascent was extremely rapid. Another day, another Nvidia record. With a 206% increase in stock price over the last year, Nvidia's recent success has been nothing short of amazing. The company's solid fundamentals and development potential are reflected in the analysts' positive view, with 91% suggesting a buy. People used to occasionally remark, "Well, I like AMD as a comeback kid, and they're going to be kind of second on the wave of the AI crest that Nvidia started 6 months ago." And based on what we've seen, particularly in the last few weeks when you've looked at the results from HP and Dell, Nvidia is essentially snatching up the profits and gross margins in this market to the tune of about 75%. Other companies are content to follow along in the hopes of selling other services later, but they are gaining the majority share. Thus, avoid interfering with success. For Nvidia, competition is undoubtedly the largest obstacle. In addition to its clients and competitors, hundreds of millions, if not billions, of dollars are being invested in venture capital for startup businesses that are solely targeting the Nvidia market. However, my opinion of the competition is that Nvidia will continue to lead. It's an enormous pie. Nvidia will continue to lead, but AMD, a reputable company, will receive a piece. I believe that Intel will make a resurgence in PC-oriented CPUs since, at least in terms of production, they have been the gang that hasn't been able to function properly for the past 20 years, Joe. They may succeed in their assertions regarding AI, but I'll believe it when I see it. To put things in perspective, while having tripled in the past year, Nvidia's revenues still fall far short of those of Apple and Microsoft combined. They also have excellent, long-lasting margins. In the technology ecosystem, it's difficult to envision Nvidia displacing Apple or Microsoft, but might it become the most valuable American company? Yes, I believe that is feasible. Investors should be aware of a number of things, though, since they may have an immediate or long-term impact on Nvidia's stock. The current gap between Nvidia's stock price and analyst price targets raises the possibility that short-term gains may be limited until analysts raise their targets. Additionally, the stock price may experience short-term volatility due to the impending expiration of 5 million equity options. Furthermore, even though Nvidia has led the GPU market, investors should keep a careful eye on the company's growing competitors and the durability of the market's present demand. Though investors must remain alert and ready for any short-term volatility, Nvidia's future is still generally bright. Long-term prospects appear bright, but evaluating Nvidia's sustained performance will require closely monitoring market developments and competition. Your opinions on Nvidia's future would be greatly appreciated. Is a correction in the stock price imminent, or do you think it can continue to rise? Tell us in the comments section below.